Good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we are going to be looking at a new stock that I'm not saying that I'm potentially buying, but what I'm saying is there is a potential opportunity and I need you guys to make the decision because today we're going to be looking through Adobe, ADBE. And the reason being is because if we look at just a short-term chart here, we look at the month, nothing really happening. We look over the past 6 months, we see Adobe's down 10%. We look at the past year, down 32%. And when we look at the past 5 years, we see, okay, what's going on with the stock? It's a big player, $150 billion market cap, yet it's still roughly about half of the share price that it potentially was at. So this begs the question, is there something wrong with Adobe? What do investors see for the future? And we're going to basically dive in and see, is this an opportunity to make some really good money in the mid to short to long term with Adobe? Is this a good buying opportunity? So what we're going to do to take you through exactly what we're going to do in this video is we're going to break down the financials of Adobe. I'm also going to tell you a little bit about their business, but if you guys do stick around, and I'm cutting myself off once again because if you stay tuned to the end of this video, we are going to get a price target from my friend Joel on exactly when he thinks there is going to be a significant reaction from Adobe. So please do stay tuned until the end so you guys get to see that. All right, back to the video. But I'd appreciate it if you did because I'm going to link two amazing YouTube videos down below which go through in depth what Adobe is, I think under Unrivaled investing and after earnings. They both made fantastic YouTube videos with the CFO and then just on Adobe itself, the business itself, which I think they can do a better job of it at explaining. But what I don't think they could do a better job is breaking down the financials because that's what I know and that's what I love to do. So I'm going to link that down below. If you guys are enjoying, we're up to 8,539 subscribers, 34 subscribers in the past 28 days. So that is awesome. But without further ado, let's jump into this video. Adobe's currently sitting at $352. You could see here that in 2022, I guess really at the peak of when we were still in COVID and most businesses were transitioning to some sort of online model, which then included online marketing and potentially kind of the start of really AI. You can see Adobe shot up all the way to about a $700 share price. Roughly, we sit at half of that today. So potentially a 50% discount the way you look at it. But in order to really understand that, we need to look at the underlying financials of Adobe. So when we jump into the income statement, keeping in mind this is a $150 billion company, you can see here from right to left that the total revenue is growing very nicely. Year over year, we're seeing a steady increase. And that's what you want to see when looking at total revenue. It shows that the business is still growing and still expanding. Cost of revenue, okay, we see that slowly growing. That's okay. Gross profit, awesome, growing. Total operating expenses, they're growing, but they're not growing as strong as total revenues, which is great to see. And then the almighty number is our operational income, growing year over year and growing very strong. So currently, this is a $150 billion market cap company with operating income of $8 billion. So that's pretty solid and continues to grow. And you got to think too as well, actually. In 2024, for example, people were willing to pay $640, roughly maybe a $250 to $300 billion price for the entire company, the market cap, when they were actually producing less operating cash flow than they are today. So that's something to keep in mind too. Pre-tax income also looking great. We got to move on to the balance sheet here. So when we look at the balance sheet, starting at $27 billion total assets, working our way up to $30 billion at the current year. What I actually like to do for total assets is I do like to go to the quarterly because the quarterly tells me the most up-to-date information. So you can see here total assets sit at $28 billion. We see total liabilities sitting at $16 billion, and we see total debt sitting at $6.5 billion. These are the markers that I generally like to look for. I think those are the most important. But the main thing when we look at the annual time frame, we see that they're growing from right to left in the positive direction for total assets. Total liabilities also growing too, and you can see total liabilities are actually growing a little bit faster than total assets, but you have to keep in mind what the business model of Adobe is, which we're going to get into. Total debt staying the same, $6 billion. We go to the cash flow, and the reason why I kind of dive into the cash flow and all the financials before actually diving into the company itself is because if the company's in a pretty poor financial situation, it's likely a company that I don't necessarily want to undertake in the first place. I like to undertake companies that are growing, that show growth, that are financially strong. Sure, something might have a great idea, but if your balance sheet, your income statement, and your cash flow statement aren't strong, that means that the company's not executing, in my opinion. I've ran small businesses before and I can understand financial sheets. Of course, I don't have as much experience as maybe even yourself, but that's just something that I like to have to give me peace of mind, knowing that the underlying financials are growing, they're strong, and I'm buying a good cash flowing company. And in terms of Adobe, they are pretty good cash flowing. If you look at operating cash flow, you can see year over year, they're growing. And actually, just even within the last year, they've actually grown about $1.5 billion in terms of operating cash flow. When we go down to their investing cash flow, you see they're not really doing too much investing within their business. Their end cash position looks pretty good. Remember, their debt was $6.5 billion. Their cash, almost more than enough to cover that. And of course, you add in their free cash flow, it's beating their debt. That is awesome. They could pay their debt in, looks like 8 months at $9 billion. So that is awesome. All in all, Adobe gets a check mark on the financial front. So that's good to see. Now we move into Adobe. Adobe, maybe you guys even use it. Adobe's been around since 1982, I'm pretty sure. You might have to quote me on that. Might be wrong. Don't trust everything you hear on YouTube. That's another one. Adobe basically, they got a few different business models. And if I could dive into that right here, they have 3 primary models. They have Adobe Creative Cloud, Adobe Document Cloud, and Adobe Experience Cloud. And basically, just to kind of touch on a few of these so you have an idea, Adobe Creative Cloud focuses more on the AI space, where you can use prompts to generate AI models. And another one is Adobe Document Cloud, which basically deals with their PDF management. So creating PDFs and sharing them with your team, that could be through that. If I'm going to be completely honest here, Adobe Experience Cloud, I didn't fully understand it to the depths that I do of the other ones. If I'm going to roll myself up here once again, you can see that it says here, Adobe Analytics analyzes 1 trillion plus visits to retail websites in the US. So what I'm understanding is they're taking data and they're basically saying, okay, what would work best for your e-commerce or online sites in order to drive customers? That's kind of my understanding of it. How can we make the experience better for our customers? But don't take my word for that. Check these 2 videos down below once you're done with this video, because I feel like they're going to do a much better job at doing that. But one thing I do want to mention is one of the reasons for, I think, Adobe's consistent and growing cash flows is their business model. And that's the reason why they're valued at $150 billion and could potentially be valued, if they double, at $300 billion. It's because their business model is pretty good. They got a subscription base where, if you're looking at, for example, using Creative Cloud, it's $69 a month. Adobe Acrobat Pro for PDFs, you're looking at $19 a month. So they have a subscription platform and a subscription based business model, which I think is fantastic in terms of predictability with revenues and also generating steady revenues. And generally what we see with most kind of, like, I don't want to say that Adobe is some kind of online platform which doesn't have anything physical about them, because they do have 30,000 employees, which on a business standpoint is an expense. I'm not sure if I could find that down here somewhere where they mentioned that they had 30,000 employees, but they do have a little bit of debt. But generally, with a lot of more so online business models, they have a lot less debt, which is what we've seen in Adobe, with them only having $6.5 billion worth of debt, and their cash flow is more than able to cover that. So that's why people pay the premium for these businesses. Maybe you already knew that, but I'm just kind of stating that once again. But Adobe, with their Creative Cloud, with their new AI generative photos that they could produce, one thing to keep in mind is their competition. And this is something that you'll see if you watch this first video by Unrivaled Investing on Adobe. He mentions how their competition could potentially be Canva. And what I do want to mention is, when I was looking for a platform to use in terms of generating, I had a baseball business, I used Canva. I did not use Adobe. Canva is a private company. I did try to search it up. They have a stock, but it's privately owned, so they do not trade on an exchange. It'd be awesome to see if they did, to have some sort of a comparison. But there is competition in the space, and there is more competition with free AI image generators. And what I do want to say about this is they're pretty cool too. You have Adobe, which you'd have to pay for to generate your AI images, or you can find a free platform. But one point I do want to make on this is that if you're a business, for example, are you going to trust some free, maybe like kind of, I'm using Gemini here, but are you going to use some free platform on AI which doesn't necessarily, it creates kind of so-so images. It isn't the most safe or secure platform, maybe takes data from unlicensed vendors, versus something that's probably a little bit more secure, Adobe. If, in my opinion, you're likely going to spend the $70 to purchase that for your company. I do think that when looking at my past experiences with work, we did use Adobe Acrobat right here for PDFs. That was a big one. I do think that looking at this from a broader perspective, I do think that most businesses will likely go with a trusted source, which is Adobe, versus something like random AI apps to generate images. Sure, I said put a monkey in space, and they did that, and it's a pretty cool image. You can tell it's AI generated. Then I said a famous investor YouTuber who everyone wants to be like and is blonde and handsome. And unfortunately, they gave me this lady who doesn't necessarily look like me. She looks like she could be my wife. But anyways, I said, can you create an image of a blonde male YouTuber with a bunch of money in the background? And this is what they pictured. Kind of like me, but his hair is a lot better in my opinion. But nonetheless, what I do want to say with all that being said is that begs a question on one of the challenges with Adobe and a reason why the share price has fallen so much. It's because free softwares are coming out like this, which are challenging Adobe's business model. But this begs a question, will they be able to continue their growth, or will they be impacted by all these little companies and all these little AI companies? And I think that's where really you have to determine, is the business worth this $150 billion price point, or is it potentially not worth it? And do you think other smaller businesses are going to take over the space? All right, so right now we are going to tap into the charts with Joel, my friend, who is a day trader. He's going to tell us a little bit about what he sees for Adobe stock in the future. He already told me he sees a little bit of a bearish trend going on, so we want to go and get his insights on that. Joel, take it away.
All right, so first we're going to mark out to the monthly range. Off the bat, marking this out, we can easily see that we're very much in a discount here.
When you say discount, what is discount?
I've actually mentioned this before. We're high in a premium. Now we're low in a discount, which means we're pretty much oversold.
Okay.
This is only typically a good sign when it's paired with bullish confluences. But if we're just oversold and we don't see any reason to seek higher prices, then it kind of just means we're like very aggressively selling.
Okay.
When we kind of zoom in here, we can see that the previous monthly high got taken out. With us taking it out, we tapped into a bearish fair value gap on the monthly as well. But after taking that high out, we very much rejected aggressively just based off of this wick that we see here. Once we step down into the weekly chart, we get more insight on what just happened there. What I just marked out right here was the monthly high that we took out. And as we observed, yes, it very much did just wick down very hard. When we take the weekly range into account as well, this high was resting in a premium. So seeing us reject out of a premium in the weekly range is a bearish sign, to say the least.
You have premium and discount. Premium being kind of the halfway to the top of the range, and discount being halfway to the bottom half of the range.
The upper half, lower half.
Premium, discount. Okay, lit.
Rejecting out of a premium is a bad sign. We would want to see us push into premium and pretty much flip trends, like close into it and push beyond it and create a new range. So yeah, very much bearish on the weekly as well. I could also just observe the fact that the daily candle that took out that high closed bearish, but I mean, we're very much sideways. Like there's not a whole lot I can point out here. We can kind of just like consider it as consolidation. In terms of what I would be expecting, I think at the very least, just based off what we're seeing right now, I would expect that these equal lows that I just marked out get ran out.
Ran out being like drop through?
Yeah, we could potentially fake these lows out and then start a reversal from there.
You mentioned like those lows there, they're sitting at about the 335 level, right? So
the price, like, yeah, in terms of the price, it would be like, 331, 330-ish. Yeah, I mean, assuming we take these lows out, once we do take them out, we would want to watch what price does afterwards. We'd want to keep a close eye. If we just like aggressively close below the lows and even displace beyond them, like create gaps in price below these lows, then we would most likely be seeking lower prices. But if we just wick under them and then start actually creating bullish gaps, we could maybe even expect a reversal to at least short-term highs. Should very much watch what we do after we take these lows out. I'm not too too optimistic of a reversal off those lows, just because if we were going to see a reversal, I feel like we would have seen one after taking these equal lows out on the monthly chart, because these would have held more liquidity, especially considering that this was on a higher time frame. But instead, all we did was wick these lows. We closed above it, right? Like at the time, that probably would have looked good, but then we would have left this gap open over here. And I mean, well, this is the month we're in now, right? We're seeing a rejection. So I wouldn't expect us to reverse off of these lows, but it is possible. To quickly summarize everything that I see on each time frame, we have a bearish bias on the monthly chart. We're going to go ahead and say the same thing on the weekly chart, also bearish. And then the daily, I'd say like we're consolidating, but I'm also kind of leaning bearish there. I wouldn't expect us to really flip. With this bearish bias, I would also expect us to reach the prices of 330. We could anticipate a potential reaction and reversal out of it, but me personally, I don't see us reversing off of that level. I think we push through it and potentially even see lower levels.
So all in all, really for Adobe, we're sitting at $350 right now, and all signs are pointing towards bearish. So it's definitely one that if you're potentially looking to buy cautiously and potentially expect to unveil more into this stock into the future. So this was great. Thank you very much, Joel. I appreciate this.
Yeah, no worries, bro.
All right, so that right there was my friend Joel's opinion on where he thinks Adobe is likely to go in the future. He sees a lot of bearish momentum on the monthly chart, monthly time frame, the weekly time frame, and potentially even the daily time frame. So if you're looking to get into Adobe, he mentioned a key level, which is going to be that $330 level. So price could potentially go lower down till then. But definitely something to keep in mind if you're looking to purchase Adobe. And I guess that still kind of leaves you guys with a little bit of time to do your own research about competitors, do your own research about Adobe as well, watch some other great YouTube videos on this. And I really do wish the best for you guys. I'll keep you guys posted with this, and we can always do another video with my friend if you guys want to see how the price reacts if it does reach 330 and where he thinks it will go from there. So if you guys really did enjoy this video, please do subscribe. It really helps us out, but also giving this video a like definitely helps a lot as we look to review more and more different stocks on this channel to potentially look for great opportunities. As you guys know, I'm buying HIT, so I'll keep you guys posted with any news on that. That's the only stock that I'm currently buying. That's why I don't really talk too much about any other stocks. But I really hope you guys enjoyed this video, and please do take care until next time.